Hey guys, today on the show, very glad to have Jorge Abreu with us. We're going to jump right in a minute, but first a little bit of an introduction. He's been investing in real estate, of course, for about 14 years, started in single family and has moved into multifamily properties big time. Wholesaling, hundreds of properties, fix and flip, 100 plus. New construction, I mean, really kind of the whole gamut. And now, these days, Jorge is very active as CEO of Elevate Commercial Investment Group, doing the big deals, out there doing the big deals, and also owns a construction company as well. So there's some vertical integration there. He's based out of Dallas, and we're going to dive in on all kind of things multifamily. Without further ado, Jorge, welcome. How are you?
I'm doing good. Thank you for having me, man.
Awesome. Yeah, thanks for jumping on. So we're talking a little bit before the call about, kind of your story coming from Miami to Dallas, but I always like to dig in and find out what was that point for you in your life when you got into real estate, the inspiration and then what actually tipped over into that first real estate investment.
Yeah, for sure, man. So I was going to college, getting an electrical engineering degree, and
was this in Miami?
In Miami, Florida International University. At some point, I kind of realized I didn't want to be an engineer. I didn't feel like the office work and being in a cubicle and that was going to be my thing. I also had the urge to build a good amount of wealth, and I knew for me to do that as an engineer, I could make a good living, but to really build that wealth, it was going to be a little more difficult. So that's when I started looking and doing a lot of reading into successful individuals, and I kept seeing real estate come up, real estate investing. And at that point, that's when I really started digging into real estate. I got my real estate license, mortgage broker license. Not that I needed any of that, but at that time I didn't know any better.
Sure.
Finally got a coach for single family real estate investing. And that's when things really kind of took off. I started implementing everything that I was learning. Few deals in. At that point, I had graduated with my engineering degree, and I was working at UPS in the engineering department as a manager there. Decided to quit and start doing real estate full time. So that was about 14 years ago.
Awesome. So the single family track, familiar, I think, to a lot of folks. It's easy to wrap your head around. You mentioned a couple of things I want to kind of dig back on a little, or dig in a little further on, realizing the cubicle wasn't for you and wanting to build wealth. Was there, a movie you saw, or a speaker or a book you read? A lot of times people can tie it back to something like that.
Yeah, no, that's a great question. I really feel like so my father was a business owner. Several of my uncles are business owners. A lot of Cubans coming to Miami are business owners in general. And I don't know, I feel like I just had that in my blood almost, that I wanted to build my own business.
Love it. That's great. Thanks for sharing that. So, at the top, I mentioned your bio, hundreds of houses and wholesale deals. So that's kind of how it goes with single family. You get the hang of it. You make a little chunk of money and go, all right, well, let's do this a bunch more times. And it sounds like you went down that path. So did you start flipping houses, wholesaling, all the above? What did that look like for you?
All of the above, but no, it was a lot of fix and flips, and that's when we decided to open the construction company, because to scale the fix and flips, we found it a little bit difficult hiring general contractors, so decided to start our own construction company. We were doing 50 plus fix and flips a year, at the same time, wholesaling the ones that we didn't necessarily want to do ourselves. Some holds, some smaller multifamily. I guess that was the first taste of multifamily. We had a couple fourplexes.
And what market was this in, Jorge?
Dallas. So that's
this is in Dallas by now.
Yeah,
gotcha.
I started in South Florida, did quite a bit of deals in South Florida. 2008 came. We didn't necessarily get hammered. We just kind of got lucky. We didn't have a lot of properties at that time, and we didn't have any holds, so we were just fixing and flipping. But the prices were dropping daily. It was, to continue doing real estate, at least at that second in South Florida, was pretty difficult.
Sure.
So that's when we looked at different markets, and ended up knowing a couple investors here in Dallas, and came and visited for a while, and couldn't believe what we saw. People right. Here thought it was bad. People here in Dallas thought it was bad, but comparing it to South Florida, it was doing great. So we made the move, haven't looked back since.
Yeah,
And
love
I
it.
forgot your original question. I'm sorry.
Oh, just talking about, the market you were in when you started doing that stuff as you started to grow. So you got some exposure to multifamily. Was there a tipping point when you were like, all right, all these houses are crazy? I mean, that's my story too, right? And a lot of people I think that have been in the real estate investment game is you just go, well, we can't double this business size. There's too many pieces, right? So you had some exposure to the smaller multifamily. Was there something that made you say, all right, we got to go bigger? What was the turning point there?
I mean, kept trying to scale, right? Kept trying to do more. At some point, we were just so busy, and I don't remember the exact day, but I remember almost kind of waking up and just being like, what have I done for the past, 10 years? What have I built? And it just felt very transactional. It was from one deal to the next, one deal to the next,
Sure.
one deal to the next. And I didn't feel like I was really building anything. So at that point, at the same time, my construction company was starting to take a turn more towards helping multifamily investors and doing more commercial away from residential. And we happened to have a couple syndicators, multifamily syndicators as clients. And I got talking to them, and I didn't even know syndication existed. I didn't know how that worked. Before then, I thought you had to have a ton of money to go in and buy these 200 plus units.
Sure. Which you do. It just doesn't have to be all your money.
Correct.
Right?
Correct. So, I mean, once I figured that out, and that's when I felt like, okay, this will help me actually build the wealth that I was trying to do from day one.
Right. Yeah, it's such a different paradigm shift looking at these bigger transactions, and it takes a little bit of adjustment. But in a lot of ways, a transaction is a transaction, right? I mean, the bigger stuff, sure, there's maybe more attorneys involved or whatever, but you're still having to get an insurance policy and negotiate with the seller.
It's a lot of mindset.
But it's still kind of like the same. Numbers. That's it. Yeah, it's the same. I was looking at a mortgage statement today. It is a $5 million. I need a mortgage balance for property we're selling, actually. And so I was looking at it and going, that's $5 million. I'm like, it didn't really faze me. I thought that's kind of cool that doesn't, I remember our first flip we did was, $40,000 purchase and $10,000 in rehab. And I thought I was the craziest person in the world taking that on,
Right.
And then you do, it's a mindset
$5 million rehabs.
Yeah, right. And it just like, you just kind of acclimate to it mentally. But that's tough for somebody who hasn't done it to wrap their head around, but we've done it, right? You do it and you get used to it. So you found out about what syndication was, and then that kind of clicked for you. And how did you move into the syndication world? Did you invest passively first? Did you get a coach in the multifamily world? Did you just kind of run out and do it, or what was your approach at that point once you discovered this concept?
A mixture of everything you just said. No,
Okay.
Got a coach, got educated, did passive investing. I wanted to, see it from that end, and at the same time, just started looking for deals. Once I felt comfortable enough with the education I had, and somewhat knew what I was doing, I guess the next piece there is a lot of networking and meeting partners to kind of accelerate that growth and bring in the track record and the experience at first.
Yeah, you bring up a really good point that if you're trying to do, let's say, 100-unit building, in my experience, sometimes people don't care how many houses you've done. Brokers don't. It's like it doesn't transfer. Sure, you've done some construction, you've maybe borrowed some money and paid it back, but what have you done in multifamily? And it's really like I was kind of blown away after I did kind of my first deal on my own, how the tone changed with the brokers. They're like, hey, man, let's get a drink. Let's go to lunch. And it's like, oh, man, all you guys before didn't really care about all this little stuff I was doing. So you bring up a good point about credibility, right? And kind of building the team to leverage somebody else's credibility. And is that kind of the approach you took to step into that bigger arena?
Yeah. I mean, a lot of leveraging the aspects that we didn't quite have down yet. We had never raised equity before. At least we had some private lenders on the single family, but I mean, we hadn't raised millions of dollars. So we needed to find somebody that had experience doing that. We were good at being boots on the ground, looking for deals. Obviously, we had the construction company, so the CapEx part of it was CapEx and due diligence part. So really, we just needed the track record and the raising capital.
Yeah. That must have been nice having the construction company going into these things, right? Because that's such a huge part of it. I mean, you mentioned two things: due diligence, which is the work on the front end before you buy or when you're under contract, and then the actual construction. And that's a huge piece. If you're doing value add multifamily, that is a huge component that you guys already had in-house, right?
Right. Yeah, no, I definitely think it's helped us evaluating the deals, not getting surprised once we're into a deal.
Right.
We know what it's going to cost, and then being able to execute, which is probably the most important.
Yeah, no doubt. No doubt. And execute on a timeline. What, so have you guys kind of maintained that process where, hey, you're going to run construction in-house or with a sister company?
Yeah, we have. So for all our deals, we run the due diligence and the CapEx part of it. And, our partners enjoy that because they don't have to worry about it, and they know it's getting done.
Yeah. Finding a GC is its own skill set, right?
Yeah.
and then getting them to execute. So if you got it in house, in theory anyway, you've got a huge leg up there. How have you guys treated property management? Has it been all third party to date?
No, so we've done a mixture. We've had third party, and then we don't have property management in-house, but we have partnered with a couple groups that have it in-house.
Nice. So you got somebody on the team that's got the management company or something along those lines.
Yeah, one of the co-GPs would have the management company in-house.
I like it. So you're getting a pretty tight-knit circle between management, construction, and the GPs on the deal.
Yep. Nothing against third-party property management. I mean,
sure.
We've got some good ones we work with now. You just it's all about the asset management at that point. What are you tracking and staying on top of them?
Yep. So walk us through kind of a typical deal you're looking at in terms of, the size, the geography, other attributes of the asset. And then really, ultimately, if you're raising capital for investors, what are you targeting to do for your investors? And if you're talking to somebody about a new project, what does that look like?
Yeah, so we like true value add deals, like you said, with the construction company. That helps us come in and execute that business plan. The more units that are not upgraded, the happier we get as far as the deal. Usually we're looking at C, maybe a B minus type of deal. Unit size, definitely want to be above 100 units. We've done.
And why is that?
Because of what type of employees you can have on site. That's really what it comes down to, having that presence on site versus trying to get sharing possibly a property manager from different properties, or it just comes down to staff. You can afford a more professional staff. You can afford that presence on site.
Right. Yeah, that makes a lot of sense. So at 100 units, you've got some kind of acceptable payroll number.
Correct.
At 40 units, your payroll number is pretty lean and is not going to support full-time people. So
yeah, you really got to watch your expenses.
Right.
Yeah.
So you're looking for 100 plus units, and I interrupted you there, but what are some of the other attributes of a project you're looking to take down?
The market. We're open to different markets. We're right now we're all throughout Texas and throughout Oklahoma, and we're willing to go wherever there's a deal. If there's a good deal, right. And we'll look at the market. We'll look at different data, population growth, and other metrics that let us know that we feel comfortable with that area. That's pretty much it.
Yeah, it's nice to be able to kind of expand your focus. Has that created, a bottleneck for you guys on being able to look at deals? I mean, if you're looking basically nationally, that's a ton of potential stuff to look at. How do you guys weed through or sift through stuff without just spending all day looking at deals? Or is somebody doing that?
Well, we have somebody on our team that does that, but we do have certain criteria that we need to meet, and things that we ask for on the front end. Whenever, let's say, a broker sends us a deal, or we have other investors that are sending us deals now wanting to partner with us, we ask to, what's the average rent right now? What do you think you can get the average rent to? What do the comps prove that we can get the average rent to? What's the asking price? We do a simple 10% rule. This is real high level, but if the 10% of the purchase price, we compare that to the average rent, that's really a high level. Like if it's greater than 10%, then we'll move forward. And then a couple other questions we ask up front. Right now with COVID-19, we want to know the reason for sure. Like we really want to dig into, okay, why is this seller selling? We see a lot of sellers right now that don't really need to sell, and if they're putting it on the market, they're probably not putting it at a discount price. We're believers that you do make your money when you purchase.
Sure.
So we've seen a lot of investors buying at some questionable purchase prices.
Sure.
To say it in a nice way, but
yeah, that's right.
That's not us. We want to get it at a discount.
Right. Yeah, you've got to be able to create some kind of advantage out of the gate and not hope for everything to go right for the next what are you guys looking at, a 5-year hold on these things, more or less?
Yeah, usually a 5-year hold is what our returns are based off of. We have started to kind of look at maybe doing some HUDs, and that's more of a 10-year play.
Yeah, the HUD stuff's interesting when you get a really long amortization, right? Just a little bit longer close, but there's some interesting stuff. What are you guys seeing right now in terms of acquisition activity? Not to get too time sensitive with COVID. I want somebody a year from now to get value from this. We don't have to totally go off the rails on COVID, but there's been some lender changes and things like that. Are you guys pausing acquisition activity? You still looking at wanting to close deals? What's kind of your firm's take on things at the moment?
No, we're still looking for deals. We still want to close on deals. We've got one right now that we're working on getting closed. Our take is we think this is somewhat temporary. I mean, we know it's going to have some lasting effects.
No doubt.
But at the same time, we're not going to let that stop us. I mean, we still feel very strong on multifamily. We think when this is all over and everybody looks back, I mean, it's only going to attract more to multifamily because everybody's going to see how well multifamily fared during this
That's true.
crazy pandemic.
Yeah, that's a good point. We've kind of had that conversation internally as well. It's like, well, we've had this thesis about multifamily, right? That it's an essential service for sure. People can cut a lot of bills before they cut their housing, and we haven't been completely unimpacted, but boy, compared to, I mean, gosh, could you imagine being in the restaurant business right now or being in the events
Retail,
business? I mean, you name it, right? And so, and this is something that nobody saw coming, and housing has done pretty well. So, I mean, yeah, I totally agree. I think that kind of just reinforces what we've been beating the drum on for years.
Absolutely.
That housing is essential and a good spot to put capital. So yeah, that's a good point. So you guys like to have that construction component of it, which is great because I think it's more difficult to pull that off, right? I mean, to really go in and do some big rehabs. Are you guys typically doing like a rebrand of the property with new monument signs and everything, or are you just kind of trying to do an interior upgrade play, or what's the move there?
Yeah, I mean, typically it's a rebrand. I mean, we completely transform the property. I mean, we've done some. Depends on the area too. I mean, you don't want to do more than what the area calls for. We've got one in Lawton, Oklahoma, which is not the sexiest of numbers when you look at it as far as the data, but it's very stable. And there we didn't do a full rebrand, and we did just modest turns, nothing crazy on the units. But I mean, the property is doing amazing. So yeah, for the most part, and it's the same concept we use in single families. So the way we found deals in single families, we went after the stuff that people didn't want to touch. They were scared of it.
Yep.
Kind of the same thing here with multifamily. Not to keep bringing up COVID, and I know, but the bridge. So bridge loans are very important when you're doing deals like this. And
sure.
The bridge market has been a little rough right now, but seems like it's getting better.
Yeah, no doubt. There was a period there where we actually lost the deal. It was just the worst timing. We didn't have certainty of execution from a lender.
For sure.
If we can't get the lender funding, nothing else is happening here. And it appears that was a relatively short period of time. I see stuff seems to be bouncing back, which is great. But it's a shaky spot there. And we've got some bridge deals that we've done in the past. What are some things that have helped you guys, the team, if you're geographically dispersed, you've got deals in different spots, what are some things you guys have kind of done internally to function well, to tackle what are complicated projects, right? These renovations, and you've got residents and all that stuff. What are some things that have helped you guys there?
Definitely finding the right help on the ground. So taking the time and finding somebody boots on the ground. Is this like on the partner side,
GP, or like on the employee side, staff at the property, or how do you mean there?
Both. On the GP side, ideally, we would like to find somebody boots on the ground, even if they have a little bit of experience, very little experience, and are just a small portion of the GP. Mm-hmm. But just having those eyes on the property help a lot. And then with the construction, depending on how big the CapEx is, in Houston, we closed a large portfolio late last year. It's got a $10 million CapEx budget. So on the construction end, so
it's awesome CapEx budget. Wow, man.
Yeah. So on the construction part, we hired a full-time project manager out of Houston versus we've got traveling project managers, but this project was big enough to hire a full-time there. And that's just made a world of difference. So yeah, making sure you have the right team. And then I would say the other thing is making sure you have some KPIs that you're tracking and weekly, and that you adjust when if you need to make adjustments. If you're not getting the ROI you thought you were going to be getting, then maybe you have to adjust your CapEx budget and put, we've done things like we've put more money into our 2 bedrooms because we're getting a better ROI there versus our 1 bedrooms, or vice versa.
Sure. Yeah, that's always an interesting thing. I mean, we all run a lot of models on the front end and make assumptions, but then you close and it's like, all right, that assumption maybe is not holding water anymore. We thought we were going to do this. So it's kind of always interesting building that CapEx budget, especially when you've got to explain it to the bank and do draws. It's like, you get 6 months in and go, well, listen, we really ended up needing to do this, and this didn't turn out to be such a good idea. And so you've got to be nimble. And I think sometimes people get wrapped around the front end kind of analysis, when, in reality, those numbers, they may change. You got to stay nimble. You got to listen to what the market's saying. If some product's moving faster or is kind of pointing the way on where to spend your CapEx dollars, you've got to adjust to that stuff, right?
Yeah, no, I agree 100%. And the lenders, for the most part, we haven't had any issues with moving money around if we need to, as far as the CapEx budget.
Right.
As long as you have communication with them and explain.
Sure. Yeah, I get the sense from a lot of lenders that, if you're making your payments and you're on top of communication, you're already like doing better than a lot of their borrowers out there. So sometimes the bar isn't very high, and as a an operator and a borrower, I don't know, I've found the bar isn't very high to stay in good with the lender, right?
Yeah, I think they like us because we have the general contracting company too. We make the draws 100 times easier. Instead of having to submit, a stack full of invoices, it's just the GC invoice. And
love it. Yeah, that's a huge process right there. So yeah, that's making a lot of people's lives easier. Well, this is a really good overview. I love the scale that you built over the years from coming into just a single family house into something with a $10 million CapEx budget on one project. That's incredible. So hats off on your success.
Thank you.
Wish you continued success. If somebody listening wants to connect with you and your group, what's a good avenue for them to do that, George?
Yeah, we have some pretty good content on our website, which is elevatecig.com. You can find most of our contact info there. And if your audience wants to email me directly, I can send them a couple checklists. I have a due diligence checklist and questions to ask sponsors before investing. And my email is George, spelled Jorge, Jorge, at elevatecig.com.
Perfect. Well, we'll link to that in the show notes. George, thanks so much for your time today. Really enjoyed chatting with you, and best of luck moving forward.
Thank you, man. Same with you.
All right. We'll see you.